Man, why are you crying? What's wrong with you? You just built your portfolio and Jim Cramer said that he's bullish? Oh God, sell everything right now. Inverse Cramer always works. Hello everyone, welcome back. My name is Dan and in today's video I will be showing you an example of the trade that I took just this morning. It is a beautiful Monday morning and I'm trading a micro NSDQ 100. I will be showing you a small account that I'm doing right now. I will be showing you what is my thought process behind it, why I took the trade and how I approached it and what was the outcome. So without further talking, let's head to the PC and let me show you what exactly I did. So over here we can see a chart of micro mini NSDQ 100, which is a micro futures contract. If you do not know what is micro futures contract, check out my previous videos where I was explaining that, or just go to Investopedia and check what is futures contracts. Okay, find and educate yourself about what is future contract. And micro is a way to start for small account day traders, because you do not need a lot of money to start trading on a micro futures contracts. Okay, so what happened over here? After a bad CPI report, which was over here, which was last week on the September 13th, we had a very hard fall and downtrend of the Nasdaq, right? So we are in a current downtrend. So what happened here? Look at the indicators. This is MACD indicator, this is stochastic indicator. What do you see? Do you notice anything different? I noticed right away. Boom, you have divergence on both MACD and RSI together with the price action. Okay, so you have a big bullish diversion, meaning on every single sign of strength or any strong key market level, I will be taking a long position. Depending on the strength of the movement, I will not be overstaying in the trade, because you need to know how long the move will last. For example, the first divergence signal, you had it right over here, okay? And this was already the trade that I took last week, okay? And boom, you had a really strong buying here, but then we had a sellout again. Now again, we went down, and then just over here where we have a strong key market level, which I didn't mark on this chart. However, you will see now when I do the live trade, when I show you the live trade, there is a key market level marked over there. So we hit the strong key market level right over here. Let me just mark it right away, actually. Give me a second. So it's somewhere over here, okay? So we tried to break it over here, we didn't manage. Then we tried to break it one more time, we didn't manage, okay? And then what happened? We bounced off of it, and that was, I believe, easy 30-40 points, right? So I was patient, I waited it to come all the way to the key market level, okay? Then I saw that it tested it out, and then we had some buying pressure together with a bullish divergence. That was my signal, okay, time to buy. And then you need to react fast, and then you need to buy it. This is the combination that I was talking about. So this is the key market level or support and resistance levels, okay, together with indicators, with divergences, that can be a really powerful tool when utilized correctly and when put together, okay, to give you this edge in order to profit in the markets, right? So you need to know when is the time to act, and you need to know not to overstay in your trade, and you need to know when to take your profits. Now let's move on to the next video where I'll be showing you when I took profits and what was the course of action. Okay, so currently we are about $90 in profit, and as you can see, I am trading micro NASDAQ, one contract only, because this is a small account, right? Basically, I've entered this trade. Why? Because I saw divergence, right? So let me just find the tool. Okay, so trend line. I saw a divergence on 1 hour chart, okay? So I spotted a divergence on both RSI and MACD, okay, as we can see over here. So there's a divergence, bullish divergence on both MACD and the RSI hourly chart. If you don't know what divergence is, just check out one of my previous videos where I'm explaining what exactly divergence is, how to spot it, and how to trade it. The reason for that was because on an hourly chart we are hitting the key market level, okay, so it's divergence combined with key market levels. We had a small break, false break over here on a key market level, all right, which I traded, and now we are about $100 in profit. We had a bullish divergence on both RSI and MACD on a higher time frame, which is 1 hour, okay. So the first first resistance that we're gonna see here is this EMA over here, exponential moving average 20, okay, period of 20 days. That's gonna be our first test, and since the market is going to open now, I think I'm just going to exit this trade before the market open. And this is how you easily make $100. So let's recap. There was a strong key market level over here, okay, we tried to break it once, we tried to break it twice, we didn't make it. I traded the bounce off of it. Why? Because it's a strong support, okay, it's a strong key market level, plus we have bullish divergence on an hourly chart, and also I think we have it on the 5-minute time frame. Just let me see. Yeah, time minute is a bit hectic. I don't usually look for divergences on 5 minutes. Usually I look for my divergences on an hourly chart because this gives you greater confidence. As you can see, $100, we had a pretty strong kickoff, right? And this is where we're going to be struggling at the moment. So this 20 EMA is going to be our first hurdle, and since the market is going to open soon, I'm just going to kill it. I'm not gonna wait, I'm gonna take my profit. Boom, there we go. $100 is popped, right? This is how you easily trade micro NASDAQ contracts. You can trade the ES, which is S&P 500. You can trade any other instrument, but the logic behind it is you use key market levels, okay, together with the divergence on your indicators. You combine them as well with the moving averages that you see on the screen. So since we are in a downtrend, I will not be going long, okay, because it's against the trend, until I see a proper confirmation, all right, until I see some signs like now that we had. So that is the only time when I will be going against the trend, when I see some strong counter signs or signs of reversal. If I don't see those, for example, now you can easily go short just over here, because on the 5-minute time frame you have 200 EMA, exponential moving average, which is going to act as resistance. You see, the price is already struggling over here to break it and to stay above it. That is also a 20 exponential moving average on an hourly chart. So as you can see here, we are touching it and literally coming back right now. We are most probably going to struggle a bit over here, and then depending on the market, today is Monday, we might have a strong impulse to the upside and just break it and continue to the upwards movement. But until I see, okay, until I see that we broke the moving average, we stayed above it, all right, and we bottomed out, we created like kind of, you see, a double bottom over here. Until I see that we are staying above all the moving average, and until I see that we are breaking through the key market levels, I will not be trading long, okay? I will not be trading long unless I see those other signs. One more time, I know it's a lot of information to process, however, watch my video on key market levels. Watch exactly how you mark the current market levels, okay? Watch my video on divergence, all right? Learn what is divergence, okay? Learn how to spot it. Only then, with a lot of practice and with a lot of time spent on the price charts, you will see and know how to properly read the price action and when should you spot those trend reversals and when should you trade it. For example, when I entered this trade, I forgot to mention this, my stop loss was just below this lowest point over here, right? And my take profit was just over here at this moving average, all right? I didn't set up the take profit manually this time because I was recording a video, so I just wanted to show you how it looks like. I didn't want to risk it going into take profit or stop loss on a camera. So basically, this was my take profit, this was my stop loss, and my interest was somewhere here. So the proportion was around 3-to-1, okay? This was the winner. I was, let's say, risking $35 to gain $100, all right? This is what you should be doing. Mark your key market levels properly, see how the price reacts to them, and then trade off of those key market levels. This is going to be a very strong strategy. You will easily make money in the long run. Now what I'm going to be doing, I'm going to be logging this trade, okay, in my trading journal, and later on when I'm analyzing, I will see how much success rate I had by using divergence, because this is actually divergence trade combined with the key market levels. This is when I was talking to you about journaling and trading statistics. When you input this and when you compile enough data, you will know exactly what made you successful or unsuccessful, right? It will exactly show you that you made this trade successful because you took signs that were valid, which is like divergence on an hourly chart, and you took signals that were strong. As I've said, let's get back to the chart. See? what happened here? We are just literally bouncing off of the EMA. Why? Because this is where the algorithms are kicking in, okay? This is when I was talking about 80% of trades being done by algorithms. So computers or algorithms are set up in that way that immediately they kick in and they start trading. They go short off of the EMAs, off of the important EMAs. They take their 10, 20, 30 points, right, off of those EMAs, and they take a new trade and they continue rolling it over, right? This is one of the things that you could use into your advantage. Follow the algorithms, right? You know that there's going to be a short-term pullback on these important EMAs or exponential moving averages. And if you're a scalp trader, you can easily make 5, 10, 15, 20 points off of those scalpings. And if you use big enough contract sizes, of course this is for the professional or more advanced people, those 5, 10 or 15 points can easily turn into 100 points by the end of the day, or 200 points or even more. And that with a big lot size is a lot of money. So guys, this is just one of the many videos that I'm going to be making and showing you my live trades, how I did it, what's the process and thoughts behind it, and stay tuned for more. This trade took about 20 minutes or so, so now you see the power of trading. How easily can you make $100 in 20 minutes? Like, where else you can do that? I mean, there is a lot of jobs where you could do that, of course, but I'm just giving an example. From the comfort of your home, sitting at the PC and doing this, you can make some side income. Of course, don't take this video for granted. Of course, it's not that easy as it seems. I've spent years in front of the PC trying out strategies, figuring this thing out, so you will do the same. But as long as you have the attitude that you will do it, you will do it. I hope you like seeing live trades. I will be going more in detail of my strategy behind every single entry, because I use different strategy on a day-to-day basis depending on the market as well. This was just a short show off because this was a very, very short trade. Usually I hold my trades a little bit longer, but I hope you find it insightful to see and realize what is the process behind a successful trade and what goes into a successful trade. These things will come to you naturally as you progress your career as a trader. So don't worry about it, just slowly take your time, go step by step, and you will get. Alright guys, thank you so much for watching, and I hope you enjoyed it, and stay tuned for the next video. Thank you and have a great day.